The United States just witnessed a dramatic constitutional showdown, one that could reshape global trade, financial markets, and geopolitical alignments. In a landmark decision, the Supreme Court of the United States rejected former President Donald Trump's attempt to impose sweeping global tariffs without full congressional backing. And within hours, Trump responded by announcing a fresh 10% tariff plan targeting all countries. So what exactly happened? Why did the court intervene? And what does this mean for India, China, Canada, Mexico, gold prices, and the global economy? Let's break it down. This legal battle centers around executive power. During his presidency, Donald Trump aggressively used tariffs as a geopolitical weapon. Under national security justifications, he imposed tariffs on steel, aluminum, Chinese goods, and later floated the idea of broad global reciprocal tariffs. The argument from Trump's side was simple. Trade imbalances threaten national security. Therefore, the president has authority under certain laws to act swiftly without waiting for Congress. But critics argued something fundamental. The Constitution gives Congress the power to regulate commerce, not the president, and that is exactly where the Supreme Court stepped in. In its ruling, the court effectively rejected the legality of imposing blanket global tariffs without explicit congressional approval. While the technical reasoning revolves around statutory interpretation and separation of powers, the broader message was clear. Executive authority has limits. This is significant for three reasons. First, it sets a boundary on how future presidents, not just Trump, can use tariffs as unilateral tools. Second, it introduces uncertainty into trade policy. Markets dislike uncertainty. Third, it reignites the global debate on protectionism versus globalization. Now here's where it gets even more interesting. Despite the court's decision, Trump quickly announced a new 10% tariff proposal on all countries, signaling he's not backing down politically. Whether this new move survives a legal scrutiny remains to be seen, but politically it sends a strong message to his base. America first remains central, and global markets reacted instantly. Let's talk about India. Indian stock markets closely track U.S. economic signals because the United States is one of India's largest trading partners. A broad U.S. tariff regime affects Indian exports, particularly IT services, pharmaceuticals, auto components, and textiles. Immediately after the news, volatility was seen in global futures markets. When uncertainty rises, investors often shift money into safer assets, gold and silver. And that's exactly what happened. Gold prices strengthened on safe haven demand. Silver also saw movement. Whenever trade tensions rise, investors anticipate slower global growth, possible inflation from tariffs, and currency fluctuations. Gold traditionally benefits from this mix. For India specifically, a stronger dollar combined with rising gold prices can widen the trade deficit and impact the rupee. Now let's widen the lens. This ruling is not just about tariffs, it's about institutional power in the United States. The Supreme Court reaffirmed that trade authority fundamentally lies with Congress. For decades, Congress has delegated some emergency trade powers to presidents, but this decision signals that those delegations have limits. From a geopolitical standpoint, this matters enormously. Countries like China, Canada, Mexico, and India have often faced sudden tariff announcements from Washington in recent years. That unpredictability has forced nations to diversify supply chains and rethink trade dependencies. If presidential tariff authority is curtailed, trade policy may become slower, but possibly more stable. However, there is a counter-argument. Some analysts say limiting executive flexibility weakens America's negotiating power in fast-moving trade disputes. If every tariff requires congressional debate, responses to unfair trade practices could be delayed. So the real question becomes, stability or speed? Meanwhile, China is watching closely. China has long criticized U.S. tariffs as unilateral economic aggression. A Supreme Court check on executive tariff power could be seen in Beijing as a sign of institutional balance in America. But Trump's immediate 10% announcement complicates that narrative. Canada and Mexico also stand in a delicate position. Under agreements like USMCA, tariff escalations can strain North American supply chains deeply integrated across borders. Now let's look at market psychology. When courts intervene in executive policy, investors evaluate three things: policy durability, political backlash, legislative gridlock. If Congress is divided, trade policy could stall. That creates uncertainty for multinational corporations planning supply chains, manufacturing investments, and export strategies. For emerging markets like India, this uncertainty cuts both ways. On one hand, if U.S.-China trade tensions intensify again, companies may accelerate China plus one strategies, benefiting India, Vietnam, and Mexico. On the other hand, if global demand slows due to tariff wars, export-driven sectors suffer. The Reserve Bank of India will also be watching carefully. Currency volatility, capital flows, and commodity prices could all be affected if global trade tensions escalate again. Now let's zoom into gold and silver dynamics more deeply. Tariffs can be inflationary because they raise the cost of imported goods. If inflation expectations rise, bond yields may move unpredictably. In such environments, gold often becomes attractive as a hedge, but there's a twist. If tariffs slow economic growth significantly, central banks may consider rate cuts, which again supports gold. So whether through inflation fear or recession fear, precious metals can gain momentum during trade shocks. That explains why Indian investors who traditionally hold gold as a store of value pay close attention to U.S. trade rulings. Now, politically, this story is far from over. If Trump pursues the 10% global tariff plan again, it could trigger another legal battle. The outcome may depend on how narrowly the tariffs are structured and under which statutory authority they are invoked. The 2026 political environment in the United States will also shape this debate. Trade has become deeply tied to electoral politics, manufacturing jobs, and national identity narratives. And remember, tariffs are not just economic tools, they are diplomatic signals. Imposing tariffs on all countries sends a message of economic nationalism. It may push allies to strengthen regional trade blocs independent of U.S. influence. India, for example, is expanding trade partnerships through bilateral agreements and regional initiatives. Any unpredictability in U.S. trade policy encourages diversification. Now here's the big geopolitical takeaway. This Supreme Court decision reinforces institutional checks within the American system, but the political appetite for protectionism remains strong. So even if this particular tariff structure falls, the broader trend of strategic trade competition is unlikely to disappear. The world is moving toward fragmented globalization, where trade flows are shaped as much by geopolitics as by efficiency. For investors, policymakers, and businesses, the message is clear. Expect volatility. Expect legal battles. Expect political signaling. And expect gold to remain sensitive to every major trade headline. The next few weeks will be critical. Will Congress step in? Will markets stabilize? Will allies retaliate? Or will negotiations quietly de-escalate tensions? One Supreme Court ruling has triggered a new chapter in the global trade story, and in geopolitics, chapters rarely end quietly. If you're building a U.S.-focused geopolitical channel, this is exactly the kind of story that connects law, economics, politics, and global power shifts into one narrative. Because at the heart of it, this isn't just about tariffs. It's about who controls economic power in the world's largest economy, and how that power reshapes the global order.